Sometimes a single investment can tell a much, much bigger story. And today, we're diving into a funding round that honestly reveals a huge shift in how tech is being built all across Africa.
All right, so this is the number that just sent ripples through the African tech scene. On March 24, 2026, a Johannesburg-based fintech infrastructure company called Littlefish announced they'd raised $9.5 million. Now that's a pretty hefty amount for sure, but
The actual dollar amount? That's not even the most interesting part of this whole thing. Nope. What this investment really signals is a massive change in strategy for both startups and investors on the continent. We're seeing a big shift away from disruption and towards collaboration. Okay, so let's break down this Series A funding round. It really is a crucial signal for the entire market. So you've got the global VC firm Partech leading the charge. But you know what's really telling here? It's that list of returning investors. When you see early backers like TLCOM Capital and Flourish Ventures doubling down, putting more money on the table, it shows an incredibly strong conviction in the company's business model. I mean, they've seen the progress from the inside and they're basically saying, "Yup, we want more of this." So what is this model that has investors so convinced? Well, it all comes down to a really important strategic choice they made. They're building infrastructure, not just another disruptive app. For years, right, the whole story of fintech was about disruption, going head-to-head with the big, slow banks. But Littlefish, they're doing the complete opposite. It's like, instead of trying to build another faster car to compete in the race, they're building the entire highway system for all the cars to run on. They partner with the banks, embedding their tech right into the systems that millions of small businesses already know and trust. And this highway system they're building? In the industry, they call it a merchant infrastructure layer. Basically, it's a single unified platform that bundles everything a small business could possibly need. We're talking point of sale, customer management, payment processing, the whole shebang. And the best part? Banks can offer it to their customers under their own brand.
Okay, it sounds like a compelling idea on paper, right? But the big question is, does it actually work in the real world? Let's dive into the proof.
So, how has Littlefish actually been doing? I mean, are the big banks really buying into this whole thing? And here it is. This number is the punchline to the whole story. In just 1 year since their last funding round, Littlefish has grown its monthly recurring revenue by a staggering 30 times. Let that sink in. 30x. That kind of growth rate is just phenomenal. And honestly, it's the single metric that really drives this entire investment round. So where does that crazy growth come from? Well, this right here tells you everything. We're not talking about a few small clients. No way. Littlefish has plugged itself directly into the biggest banks in South Africa. We're talking Standard Bank, FNB, and Absa. Oh, and they've also partnered with Visa. You see, they're not just selling to the market, they're literally becoming part of the market's core infrastructure.
Now, what's happening with Littlefish? This isn't some isolated event. It's actually part of a much bigger trend that we're seeing all across the African continent. Let's call it the Great FinTech Shift.
This quote from our source material just nails it. For so long, investors were pouring cash into flashy consumer-facing apps. But now, the smart money is going one layer deeper. And you have to ask why. Well, they've learned a couple of hard lessons. Getting individual customers is crazy expensive, and trying to build trust from zero is a massive uphill battle. Infrastructure players, though, they get to bypass both of those huge hurdles. And this chart right here shows you exactly what that shift looks like in real time. See that big bar on the left for consumer apps? It's kind of starting to level off. But now look at the bar on the right. That's infrastructure. It is on a sharp upward climb. To put some numbers on it, in just the first 2 months of 2026, African startups raised $575 million. And yeah, consumer apps are still getting some of that cash. But the real momentum is with infrastructure plays, just like Littlefish. So what does this all mean for the future? Well, for Littlefish, this $9.5 million is all about laying a brand new foundation for small business banking all across Africa. And the market opportunity here is just staggering. We're talking about 80 million small and medium-sized businesses across the continent. By working with the banks these businesses already trust, Littlefish can tap into this massive market way faster and more efficiently than any standalone app could ever dream of. So where is all this new money going? Simple. It's fuel for a major expansion. They're going to be growing their team, speeding up product development, and, this is the big one, pushing into more than 10 new markets across the continent. We're talking Kenya, Tanzania, Uganda, Botswana, Zambia. They're taking a model that works and they are scaling it fast. So, look,
The big takeaway here is so much bigger than just one company's funding round. What this deal really shows us is that a new playbook is emerging. It's a lot quieter, it's less about disruption, and it's more about building the fundamental rails that the entire economy runs on. And that leaves us with a final thought to chew on. Are we actually watching the foundational layer for the next generation of African small business banking being built? Right now, one partnership at a time.